Good morning, real estate mindset community. Happy to be here. Happy Sunday to you guys. Hopefully, you guys are having a great weekend. Wanted to get you guys a quick video out from Insider that's going to go into, our boomers, the reason why house prices have been sustained. Our boomers, who's to blame for things. I found, that title of the article, like boomers are to blame, incredibly crazy. But I think the data is really important, guys. To say that a group of people are to blame for something and really all they're doing is saving their money, right? Boomers know how to save their money. They're living within their means. And really, the older you get, you're supposed to get smarter. So I would say, what's probably to blame for the housing market is the Federal Reserve, quantitative easing, interest rates too low, stimulus, probably things like that. To be honest with you, it's crazy to me, how many people are blaming the boomers. But it is interesting data, you guys. And a lot of millennials right now are actually getting their down payment from their parents. But I wanted to say good morning to every single person. Now, I want to throw up this question real quick. I found this super funny. I'm just going to answer this question right here. Basically, should I buy a car to save money in gas, or should I buy my first rental property? I don't know. It depends on your local housing market. If you can find a great deal, if you can find something that cash flows, maybe you want to do that. But here's the thing. In a normal housing market, when we're talking about cars, generally a car is a depreciating asset. Generally a house is an appreciating asset. So do the math, right? And then plus maybe you can take that money and put it into treasuries and get, a 5% yield on that. I don't know, but generally it's probably a better idea. Maybe not in this market, but generally it's probably a better idea. But anyways, guys, good morning to everyone. I see everyone, Vovo, Melissa, Young, Steve-O. Appreciate all of you guys so much. MFH, definitely appreciate you guys. There's I Am Blessed. There's Sacred. I saw it. I'm glad you didn't get a new car, Sacred. And I Am Blessed. I have responded to all my emails. On Monday, I'll be responding again. I had to get through 250 emails. I'm now better at being on top of my emails, but let's get in, guys, right now to this article. I'm going to make this very, very fast so you guys can come here later. It's not going to be a 2-hour live, and I only have a little bit of time because Todd Sachs is going to get here, okay? Wanted to do this video before Todd Sachs got here. But Todd Sachs and I are going to do a video on Pace Morby and Subject to or creative financing. And I'm going to tell you guys, we're both going to tell you guys, is it real? Is it too good to be true? Is it illegal? Is it legal? Subject to, in that community of subject to, investors, it's insane how fast that's grown. And it's kind of like, when I first looked at it, I thought it was just a Ponzi scheme and a cult of people. So now that I have a lot more information on it, I'm really excited to report that with you guys. Again, that's going to be something I do later today. But listen to the name of this article. This is crazy. This is from Insider. Blame the boomers for, let me just ad lib here. Blame the boomers for saving their money. Living within their means. I had a comment on here that said millennials are the biggest crybabies. But if you're a boomer and you're listening, understand that millennials right now have it really hard. Okay, we have it really hard. Young adults have it really hard. Look at the PE ratios. Look at how much harder it is to live. Things are a lot more expensive. There's a lot more corporate greed. The gap in being rich and poor is widening. It's a different economy. It's very sad, you guys. A lot of the American values that I was raised with like saving money, living below your means, helping Americans, helping your neighbor out, I just don't see it as much, and it's very, very sad to me. I pray when I eat. I go to church. We tithe our money. That's what I do. I raise my kids to work hard. I raise my kids to be self-sustaining as best as possible. Obviously, they're young, but it's sad to me that we don't see that all over the place. But anyways, guys, 3 bullet points from Insider right here. High mortgage rates and short supply of housing are just part of the pricing story, according to Barclays. And again, they're going to bash boomers for being smart. Okay, just to put this in perspective. Now, bullet point number 2, strong demand among older Americans is keeping prices high, with analysts saying, blame the boomers. Should we start like a hashtag blame the boomers? I don't think so, guys. Okay, I say we learn from the boomers. Even though things are harder right now, like let's remember like good principles. Save your money. That's really the biggest thing, like save your money and don't get in overwhelming credit card debt. Okay, that's as older age groups tend to spur more household formation, adding pressures on the market. So household formation obviously being led by boomers, not millennials. Very, very interesting and intriguing when we look at the age groups of this whole thing. There's a paradox in the housing market that explains what's really, this is so funny. It's hard for me to read this. That explains what's really driving demand and home prices higher. So it has nothing to do with inventory. It has nothing to do with quantitative easing. It's just the boomers, right? Let me know if you agree with that. Seriously, comment below. Do you guys think it's just the boomers? Is that why we're in this situation? Just because the boomers? Does it have nothing to do with the corporate greed, the run up, the lockdowns, COVID? Does it have nothing to do with those things? I mean, seriously, let me know what you think. I think it has a lot to do with those things, and they're just trying to blame someone else on the affordability crisis. But anyways, despite a brief drop in home prices late last year, valuations have been rebounding since the first quarter. As prices keep climbing, the housing market has fallen into the grips of an affordability crisis, and middle income buyers have been increasingly locked out. And if we looked at how many people are locked out right now, when we look at like a 2.5% interest rate and we look at like a 7% interest rate, that's 45% of purchasing power blown out of the water just from interest rates. Okay. Then we add prices, that's more purchasing power. And then we add what's happening next month, school loans. And I know as a loan officer, we count school loans into DTI and to qualifying factors, but it doesn't matter. They're still going to start paying that money out of their pocket. And when consumers start paying more money out of their pocket, they automatically have less purchasing power. So I suspect we're going to be more at about 60% of purchasing power completely wiped out by, October of this year. So when, supply does come back, are the buyers going to come back like they did before? Probably not until things get more affordable, right? So let's keep going here. And for you guys that are on the sidelines, what I have constantly been telling you is we want to stay ahead of the unaffordability. We want to stay ahead of recession. We don't want to just stay at home and watch YouTube videos. You know what I'm saying, you guys? We want to stay at home and like research things like Zillow, Redfin, talking to a realtor to get reports on our market. Those are the things that we need to be doing. And then also credit income assets. Those are the things we should be doing now. Now, this goes on. All right. Despite a brief drop in home prices last year, valuations have been rebounding since the first quarter of this year. Now, we hit a low this year in home prices. Guys know when that was? Anyone know? Comment below if you guys can. I see comment lover. Easy credit equals bankruptcy. I see your guys' comments. I love you guys. I want you guys to do so well. I'm talking to first-time home buyers. I'm talking to people on the sidelines. I'm not talking to investors that own 100 doors. I'm talking to you guys that have questions, that are worried. I love you guys. But anyways, we're locked out. There's a lot of people locked out. If you're locked out, the thing is, guys, is normally people automatically give up hope. If you're giving up hope, that's what the market wants you to do. The more that you give up hope, the more that the elites will be able to get a sharehold in this market. You have to be able to sustain during these hard times. If you sustain during these hard times, you're also going to be an investor in the housing market that's able to find a great deal. It's not just going to be institutional investors as long as you're keeping up. Okay. So please, guys, let's keep up. Let's keep up. I know it's hard. It's very, very hard. It's very, very hard. But when has life been easy? When I was a child, maybe, and my parents took care of me, life's not supposed to be easy, but your mindset is supposed to be cheerful. Remember that. And I'm trying, you guys. I hope you guys see I'm trying to be cheerful. I'm angry at people, but I'm trying to be cheerful. Standard explanations place reasonably on high mortgage rates, which have discouraged homeowners with lower rates from selling. That's called the golden handcuff effect. This also happened in the 70s and 80s, called the golden handcuff effect. However, in the 70s and 80s, the way that buyers were able to get around the golden handcuff effect was assumable mortgages, which are no longer relevant. Assumable mortgages are no longer relevant, even though some loans have provisions that allow it. This has kept inventory tight as an already supply-starved market, forcing buyers to bid higher on the few homes available. But that's not necessarily true in every metro area, is it? Especially in my metro area here in Houston. I have an overwhelming amount of inventory now. In fact, I've had more inventory than I have had all year. I have roughly how much were the price cuts? I think 30% of the total inventory in Houston has price cuts. If you're a realtor in Houston, literally go on MLS and find out what I'm saying. You'll see that inventory is 30% of inventory has price cuts in Houston. Huge. And also you'll find out that over 20% of active inventory is for new homes. A lot of interesting stuff if you guys access MLS. All right. Now, but Barclays analysts said that alone doesn't explain. So they're saying the interest rate increase alone I'm sorry, they're saying that the lack of supply alone doesn't explain price stability. But Barclays analysts said that alone doesn't explain the surge in home prices, according to their note titled "Blame the Boomers. The aging of America is spurring household formation." Again, you guys, I really feel like this is just like, oh, look at the squirrel over there, right? Look at that over there. Who cares about what the Fed did? It drives. Honestly, I think we have a lot to learn from boomers. I think we have a lot to learn from people that have gone through this before and that are okay. I don't think that they should be belittled. That's my opinion. This may strike some as paradoxical. Geez, that was hard to say. As many associate demand for housing units with rates of increase in population. It is not true that an older population requires less housing. That's interesting. It is not true that an older population requires less housing. While it is likely true that older people tend to prefer smaller housing units, it is not true that older populations require fewer housing units. What does that mean? It means the older you get, the more houses you own. Do y'all understand what they're saying here? So even though that, depending on someone's age, they may downsize into a house, get a smaller house, it also is showing that depending on their age, they're purchasing more homes. And when we look at the age group, it's very, very intriguing, you guys. The blue is 2017, the gray is 2020, green's 2023, and the light blue is the forecast of 2026. And what I want to do is draw your attention to the age group of 35 to 44. According to reports, this is now the average age of homeownership, and we can kind of see that because this is basically saying how many households were formed. Okay, how many millions of households are formed. Now, what I like about this group, because this is a millennial group, it is anticipated that the market share goes up in the future. So there's not lost hope. Whereas the younger generation, look at this, it actually goes down from 2023 to 2026. But when we hit millennial age, 35, 44, it actually goes up, with ages 45 to 54 plateauing, 55 to 65 also plateauing. But this is what's really interesting to me. For some reason, when the age group goes to 65 to 74, it goes up substantially. So again, this is telling us that the age of people purchasing more than one house explodes at age 65 comparatively, as far as 2023 to 2026. I find that incredible. So, again, people aren't just retiring. They're not just, drinking tea on a lake. Maybe they are drinking tea on a lake, but either way, they're investing in real estate. So odds are, if you're 65, you're going to own more than one house. And that's not a bad thing. Okay. I'm not saying that's a bad thing, but nevertheless, that share is going to go up. You can see that here. And also, if you're over 74 props to the people that are over 74 years old, kicking butt. I want people to do well. I don't think we're in this situation because of consumers and boomers. I think that we're in this situation, again, corporate greed, bad job from the Fed, money printing, low rates. That had nothing to do with age groups, you guys. That had everything to do with our government. We were shut down. We were locked down. That's not the boomers' fault. Okay, in my opinion. Just saying. Hope you guys agree. I don't know if you do. Let me know if you guys agree. I appreciate you guys so much. You have no idea. Barclays explains that when the head of a given household gets older, the size of the household gets smaller in terms of people as children move out and couples separate due to divorce or death. That's how more households are created as the population skews older. So what this tells us is even though, again, death, divorce, or downsizing. So most people that get a little bit older, they do downsize and form a new house. But it also is an indicator that they keep their real estate. And I tell you guys all the time, we don't want to sell our real estate. Okay, I have many reasons why I'm saying that. I can explain why I'm saying that. But generally, you guys, it's very smart for little people like us. We're just little people. I'm just a consumer myself. I'm a normal person that has been beat up and spit out throughout my entire life in the house. And I can tell you guys, it's smart to hold your real estate. It generally is smart. And I want to see you guys doing it. I want to see that from you. I'm not saying 10 houses. I'm not saying 100 doors. I'm saying maybe 3, 4. I mean, I have 4 kids. I know what you're thinking right? I'm just going to join the group of people that are just passing houses on to their children, but that's not necessarily true. If I pass a house on to my child, which I would love to do, I'm going to make them work their butts off for it. I want to see them crying because they work so hard to get the house that, that they're crying. They feel emotionally broken. And then I'm going to build them back up and let them know it's okay to fall apart and work hard. You just got to get back up and keep doing it and have a good mindset. I'm sorry, guys. Got a little passionate right there. I love my children. Despite notable increases in demand from the 35 to 44 cohort, almost all additional demand is explained. Wow. Okay. Almost all additional demand is explained by the aging population with significant increases in households between 65 and 74 and 75 plus groups, analysts said. To me, that's crazy. Honestly, I'm proud of these people. I'm not proud of our Federal Reserve, though. Because that's why we're in this mess. All told, our estimates place the underlying pace of new household formations across all age cohorts at around 1.3 million units. Now, take a look at this, guys. I highlighted this last thing, and I'm going to get going here. Prepare for Todd. Okay. Now, let's see. Here we go. This last thing, okay. Market Insider says, last thing from Insider. Still, adding housing construction will only slightly ease the inventory shortage. Prices, listen, this is interesting. Prices are unlikely to come in line with inflation until the fourth quarter of 2024. So that's interesting, right? So they're saying probably the way I read that is like we're going to hit bottom of this cycle because we're in a cycle, quantitative easing, housing market reset. They're thinking that we'll hit bottom potentially fourth quarter of 2024. Now, I've told you guys, I believe like bottom, right? I'm not trying to time the bottom. I'm hunting right now. I hope you guys understand that. But if I were to guesstimate based on the data and based on like turmoil in the economy, I would say the economy is probably going to be worse after the election. Unfortunately, as much as I hate it, and probably going to be the worst I think Q4 of 2025. I don't think Q4 of 2024. I think the bottom is going to hit quarter four of 2025. Predominant reason I think that is because I believe personally unemployment will be worst towards the end of 2025. The reason that I think that is corporate America. If we look at which give us the jobs, most of the jobs come from corporate America. Corporate America is going to be in a way worse situation in 2025 than they are in right now. And I'm telling you guys that from a financing standpoint, there's way more people, companies, corporations that are going to be forced to finance in 2025 than right now. I believe the number is double. I believe it's around double the amount of forced refinancing in 2025. And obviously, if people are being forced, corporations are being forced to refinance into higher mortgages and to higher interest rates, obviously they're going to have to cut expenses like employees. And I believe that's when we're going to really, really see the unemployment unhinge. But again, you guys, I don't know that for sure because literally there's like 10, 15 black swans that can come up tomorrow. I mean, did anyone really think that we were going to have bank runs start in the beginning of this year in March? Seriously, did you think we'd have bank runs? Do you guys remember 4 months before the bank runs started, I did a video on the FDIC warning about this very problem. 4 months before the bank runs happened, I did the FDIC video. But I still didn't see that coming. I mean, seriously, did anyone see it coming? So black swans can happen at any time. I hope all of this, is really telling us this. Okay, here's really where I wanted to end on this video, you guys. We have something to learn from the older generation. We have something to learn from boomers. They're doing well right now. Why are most of them? Obviously, there's people that are not doing well, and my heart goes out to you. But most boomers are doing well. I ask myself all the time, why? Why are they doing well, you guys? Probably doing well, again, because they're living within their means. They're saving money, and they're not drowning in debt. I think really, honestly, I think millions and millions of Americans, if they just adjusted their lifestyle slightly, I believe there would be millions of more Americans that would be qualified to purchase a house. I believe as a result of my 22-year experience in real estate, I believe most consumers do not qualify for a house because of their spending habits. And I'm not being unsensitive about the overwhelming inflation. It is hard to live right now. But I'm saying this is a pattern that's been happening for years, you guys, decades. And honestly, we really have no excuses. There's so much knowledge available. But anyways, I'm going to get out of here, you guys. I see you guys in the comment section. I do want to do another market analysis. I will be doing another market analysis. You guys, I don't feel sorry for myself. I don't know if you're talking to me, Jeff. I never feel sorry for myself. Every single thing that I went through, I'm happy that I went through it because of the lessons that I've learned. Unfortunately, Jeff, some people have to learn the hard way. I was one of those people. I don't feel sorry for myself. I feel empowered and I feel strong and sharp. And I'm just going to say it like that. And I'm not going to let people bully me. But I love you guys. I definitely appreciate you. Sorry I'm not getting to the comments. I wanted to make this short. And if you're out there investing in real estate, you guys already know I wish you luck. And obviously, I hope